You're
Yeah.
definitely over 50% with Bitcoin on any 4 year period of time you can pluck off the chart. You're exceeding 50% annualized,
Yeah.
right?
Yeah.
So and like any Bitcoin I buy, I'm buying it to hold it in excess of 4 years. I can tell you that. And
Yeah.
so, yeah, for me, I'm just like, I look at it like hyperinflation's happening. It's happening in Bitcoin terms. The rest of the world's going to come to that realization because this train's not letting up. Like my expectations for 2024 by the end of 2024 is I think it's going to be nuts as to like what it does in terms of fiat currency.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a wonderful day today. Now, I know I haven't been doing a lot of updates recently because honestly, the price action really hasn't changed in the past 3 weeks. And, you know, if you've been watching the channel, it's been that sort of conflict between that level-headed technical analysis approach that we've been doing for over 6-7 years, right, on this channel, which has played out, you know, the 4-year cycles, the Bitcoin halving, we don't get a new all-time high before the halving, right? But the question is, and this is what's on everybody's mind, is this time actually different, right? That's that conflict because we have the ETF. Now, as you guys may remember, we were extremely bullish throughout the year of 2023, you know, basically from 18,000 as soon as we broke that level up. A lot of bears, you know, calling for these lower, you know, 10K, 6K Bitcoin. Now, if we go back to the chart right here, you could see that once we essentially broke out of that area, you know, we were looking at the 0.618 Fibonacci. And to be completely honest with you, we basically nailed that, you know, give or take a few dollars. And that was basically on ETF week, and we did pull back. So we haven't been able to get back up to that area just yet. So is that the area that we should be looking at? I mean, if you have a look over here, we did have what I believe potentially to have been maybe some form of a bear trap, which is why we weren't going bearish, but we were saying that we were optimistically cautious. Now, the fact that we have broken back into this uptrend does potentially put Bitcoin on track somewhere around $46,500. And, you know, would that be the area in which we should be getting incredibly short-term bullish? Well, again, you know, considering that we still have to break out of the top of this area, and we do have that 0.618, there are a lot of things to consider. If we come over here, the main point that I was trying to make is these are the weekly candles that we've been having ever since December. Basically the week of December 4th. And, you know, you could see that, yes, we do have some wicks to the upside, some wicks to the downside, up, down. We have this big fake out right here. But ultimately, what we've been looking for is to get a weekly candle close somewhere out of this region. Now, obviously, looking at this candle right now, it does look quite nice. In fact, all we have to do is basically close around 43,900, let's just say $44,000, close a candle above that, and that would be essentially, you could say, you know, getting a little bit more bullish for Bitcoin, right? If we have a look at over here, you can also see something interesting that happened was we did have the Dixie breaking down as well as the S&P hitting new all-time highs. But again, the big thing that a lot of investors are paying attention to, especially now that we have these ETFs, is whether or not we are going to go full on risk on. You know, is the stock market going to have that breakdown from this area, or are we going to break straight through that? So that's basically what I want to talk about today, because as I've been saying, you know, we're looking at the TA, we're looking at the 4-year cycles. There's a lot of things that play out similarly, but at the same time, like I told you, that phone call that I had with a very good friend of mine who works for an OTC desk, they're saying this time is totally different, and you just can't even imagine the amount of demand that is going to be coming in from these ETFs. And the biggest question really right now is, are the tables about to turn for Bitcoin in a positive way, right? I mean, we are extremely bullish long-term for Bitcoin, but I got to tell you guys, there is something happening right now, and this is not even the ETF. This is on-chain data that we've been analyzing for years that I have never seen happen before. And it's both exciting and scary at the same time, because if this does happen, it could basically send the signal that all of these models, all of these 4-year cycles, all these different charts that everyone has been using has essentially been shattered, because what we have now is an unforeseen accumulation, right? Something that could potentially cause that domino effect, something that could cause something that we've never seen before, that you can't see in a chart, that you can't see in an indicator, that you can't even see on chain, right? And that is what could send us into that next paradigm, which is why when you hear these crazy calls about, $1 million Bitcoin, $1.3 million Bitcoin, I mean, is that realistically possible? I want to dive into that today. I want to show you this crazy anomaly that we've never seen before, and I want to break down possibly some of the biggest news, even though it was something we were anticipating. Well, it just came out, and guys, I'm telling you, this could change the landscape forever. And again, if you're still sitting on the sideline, if you're not really understanding what's happening, yes, we've been optimistically cautious. Yes, the charts are telling us that there is that potential to have the retrace, and we haven't fully gotten out of the woods just yet. But again, as I have been saying, I believe that if we see the dip to 35, or if we don't see the dip to 35, I believe that Bitcoin is in a bull market right now, and I believe that any of these dips that we see are dips for buying. So let's dive in, let's have a look, let's have a very, neutral approach to things, but you cannot ignore the big picture in the background. So before we get into it, I do also just want to mention, guys, that if you are trading over on Apex, they do have a deposit bonus of up to 15,000 ES Apex. There's certain tiers, you guys, you can go over there, you can check it out. The more you deposit, the more they give back to you. And of course, I would say we were one of the first channels to really cover Apex, the decentralized exchange. And if you did happen to get some form of exposure to their token, it is up 372% this year. So just kind of worth pointing out. That's something interesting if you guys are interested. But sticking and having a look at like what Mag said, could it really just be this simple? Could it really just be that Bitcoin is destined to continue on its trajectory using this fractal of the 4-year cycle? And is this putting Bitcoin at around $270,000 sometime at the end of 2025? Or on the flip side, could it go higher? Or, this is what we're also going to talk about today, could it come even quicker than we had imagined? Well, this is the big news, guys. This is the big news. So we have digital asset investments surging 708 million in inflows last week. That's $1.6 billion to date. I mean, these numbers may sound large to you, but this is extremely impressive. In fact, like Fred Krueger had pointed out, it will take less than 30 days, or it will have taken less than 30 days for the new 9, all of these different ETFs, to overtake MicroStrategy in Bitcoin holdings. You can see right here. Here we have these ETFs, and this is MicroStrategy. So I think what he's trying to say here is you can see how fast this could escalate, right? Because again, this is something that we've never actually seen before. He goes on to say that the ETFs are eating the world. They ate every other asset class, and they're having Bitcoin for dessert. But this is really what we've been waiting for. And officially, we have Fidelity offering or saying that they now have a 1% to 3% Bitcoin allocation in their all-in-one asset allocation funds. Now, this is over in Canada using spot Bitcoin ETFs. The conservative version is posted below. So the conservative is 1%. The extreme is 3%. So do you understand what this means? This literally means that now in their all-in-one, where basically it's like their version, I suppose, of like the S&P, they kind of diversify your portfolio for you. They're saying that the least risky is about 1%. But the big question is, how much does that really equate to? This is only one ETF. This isn't even all of the other ETFs that could eventually be split into other ETFs and given to their clients. And I mean, you know how this goes. You guys have, watched the movie The Big Short and all this other stuff. But I want to give another massive shout out to, British Hodl. He was probably one of the original guys talking about this. And he breaks down the significance of just this simple number alone.
Now, what does that mean? That means that a 1% allocation across Fidelity's AUM of 4.5 trillion is a $45 billion purchase. Based on the Bank of America bull market multiple, that would add just that 1% allocation would add $252,000 onto the price of Bitcoin today. $252,000 onto the price of Bitcoin just from a 1% allocation from their most conservative portfolio. Now, here's the interesting part. What's interesting is that their portfolios, obviously they have a conservative portfolio, a medium risk portfolio, a high risk portfolio, and it titrates up all the way to 3%, right? And a 3% allocation on 4.5 trillion is $150 billion from one asset manager alone. Now, this allocation is based on its Canadian website at the moment, but I'm assuming that it's going to be the exact same for the US. So this is going to be a universal allocation coming across all of Fidelity's advisors for all of their clients. Now, this is how passive flows start, because you're going to have pension funds that get Fidelity to manage their money, and they're going to say, hey, yeah, we need a conservative portfolio, and Fidelity's recommended conservative portfolio is 1% Bitcoin, which means every single month those pension funds are putting that money in, and every single month 1% is being allocated to Bitcoin. So the passive flows are starting. This is not, again, I've been saying this for months. They're not here to screw around here. This is going to be a transition that's going to take some time, but you have got an opportunity here to get to your at least one Bitcoin, right? You've got to get to your one Bitcoin, and then whatever allocation you want to make, ideally based on the amount of wealth that you have.
And personally, if you ask me, the reason that you're seeing things like the stock market rally, and the reason that you're seeing, they said BlackRock was like, they could recommend up to 80% allocation to Bitcoin. I mean, 80%, Jesus, we're working on 1 to 3% here. But you know what it is? It's when you have Powell coming out, at the FOMC, having these conversations over on 60 Minutes, and he's making comments like this.
The U.S. is on an unsustainable fiscal path. The U.S. federal government's on an unsustainable fiscal path, and that just means that the debt is growing faster than the economy.
I have the sense this worries you very much.
Over the long run, of course it does. We're borrowing from future generations. It's time for us to get back to putting a priority on fiscal sustainability. And sooner is better than later.
And that is the beauty, I suppose, of the internet, right? The internet has its downfalls. There's a lot of fake news. There's a lot of things that, maybe are not accurate. But at the same time, it's allowing that information to get passed very, very quickly. And what it's doing is it's allowing people to become more financially literate, to allow people to understand what is really happening to their currency, the secret tax of inflation. And it's allowing people to understand why Bitcoin is the hardest and safest money that there is, the most sound money. In fact, you have President Obama's former deputy chief basically saying that he's extremely bullish on Bitcoin.
We've got, crypto. Some people are loving it. Some people are hating it. They say its time has passed and all. Where are you on this? Obviously a big proponent here. Right. Where do you see it going?
Look, I think blockchain and crypto is one of the most exciting developments in our lifetime. I think when this is all over, we're going to be known, this generation, for COVID and for reimagining our financial system. I'm incredibly bullish on this. I think it's good to have a crypto winner, getting rid of some of the BS projects that are out there.
What about Bitcoin itself?
Look, I'm bullish. I'm buying Bitcoin right now. I think, anything.
So in and around $20,000, can it ever get back to 60 some odd?
Oh, I'll bet you my Porsche it gets back to 60.
Really?
Yeah.
Okay.
Absolutely.
Life truly is good if you have that to bet.
But one of the things that we've been talking about on this channel, and this is why, yes, short term things could get choppy. That's what markets do, right? Again, we said that probably most likely dips are for buying. That's what I believe. But when you look at the long-term implications and you understand, and this is something we were talking about months ago, is that unforeseen demand, that liquidity crisis, that liquidity crunch. Yes, right now, we have the grayscale Bitcoin ETF selling out, whatever, and that's what was kind of creating that sort of equilibrium, keeping that price in that area. But what happens when that demand, especially with the halving, coming in, and we did say that it was going to take these guys anywhere between 3 to 6 months to really start ramping up these allocations. This is when you see those supply crunches, and this is what Samson Mao was talking about over on Swan Bitcoin.
If you can see past the noise, then the signal is there, and the signal is you have a massive amount of accumulation on all the new 9. IBIT and Fidelity FBTC, they're raking in about 200 to 175 million per day on average on every trading day. And if you calculate that in BTC terms, that's about roughly almost 9,000 coins. And we're producing 900 a day. So you can see that it's not sustainable. And there is going to be a supply crunch because you have this massive amount of demand. But I think people don't see that because they're not seeing the price go up immediately. But, Bitcoin seems to surprise a lot of people. It moves very quickly, and it does go up very quickly too. In the past, we've seen 20x in 9 months. And I think with this new source of demand, you can easily 20x in weeks.
So 20x from these price levels in weeks, what kind of price levels are we thinking at? Like if you had to put a number on that?
Well, 20x from, we're basically almost at 50K. So 20x 50K is $1 million, right?
Right.
And if we get to 100K, which I think is very possible, then it's just 10x to 1 million. So these movements are just normal Bitcoin doing business. So it's not crazy that we can see Omega candles of 100K and we can see Bitcoin go up to 1M.
You may also be familiar with the Veblen effect. Okay, so a Veblen good is basically something, I'm just going to explain this like to a 5-year-old. It's something that, it has perceived value, like a watch or diamonds or a luxury good or something like that. And because the value is going up, it actually makes it more, I guess you could say, appealing, right, to people who don't own it. And I know this seems backwards. We know, you want to buy the dips, but some of these people, they don't want to buy it until they see the price rising up. And then after they see that 100, 150%, 200% price, they're like, well, I got to get one of these because now it's almost like a status symbol. And Samson Mao also broke down how, using this sort of Veblen effect theory, you could actually get to these crazy valuations much quicker than any chart, any indicator, any TA, or really any logical sense could make that seem possible.
By and large, the ETFs are marketed towards boomers, pension funds, institutions, even other companies to hold. And I think that has yet to really hit the market. Once we see the pension fund money trickling into the ETFs, and they take time to decide, right? But that simple act of pensions buying Bitcoin is going to trigger this massive supply shock and demand surge, and it's going to happen very rapidly because there's this sort of a weird thing. Maybe you can call it maybe it is the Veblen effect. But as the thing becomes more valuable, the more people want it. But it's the pension funds coming in is going to drive the price up, and that's going to signal to other pension funds. So I don't know if it's a Veblen signal or what, but there's got to be some new terminology that we create here. But as the Bitcoin price goes up, more and more people are going to start looking at this. And then you have this sort of threshold at which we cross gold market cap, which indicates to the world that this is the new gold. And I've called that the Veblen threshold, but that's sort of an anchoring point at which you don't want gold anymore. This is gold, and you need gold, and that puts us on the same footing as the demand for gold for nation states, because their treasuries are still accumulating gold. A lot of countries like China are rapidly trying to get gold and buy a lot of gold. So now they need to look at Bitcoin.
And just reiterating on the inflation and what Powell said, and people realizing that really putting your money in a savings account is a terrible idea, because let's say even if you do 5% on a 5-year CD or something like that, well, if inflation is at 3% like they tell us it is, or whatever, 4%, you're still not outpacing it. So when you have that long-term view, if you're just looking for a quick flip, like I talked to another guy the other day. We were talking about Bitcoin, and he's like, I just lost so much money on Bitcoin. And I'm thinking to myself, how did you lose money on Bitcoin? I mean, when you think about where Bitcoin is, there wasn't really a lot of time in Bitcoin's history that it actually traded above the level that it was today. So that would have meant that you bought somewhere between now and the all-time high, price came down, and you would have either had to never look back into it again, never learned or did any research, or you simply sold for a loss. But when you have that long-term approach to Bitcoin and you start using it mentally as a unit of account, that's when the perspective really starts to change. And that's exactly what Preston Pish was talking about over here on Luke Broyles' channel.
Yeah, you're definitely over 50% with Bitcoin on any 4-year period of time. You can pluck off the chart. You're exceeding 50% annualized.
Yeah.
Right. So, and like any Bitcoin I buy, I'm buying it to hold it in excess of 4 years. I can tell you that. And so, for me, I'm just like, I look at it like hyperinflation's happening. It's happening in Bitcoin terms. The rest of the world's going to come to that realization because this train's not letting up. Like my expectations for 2024 by the end of 2024 is, I think it's going to be nuts as to like what it does in terms of fiat currency.
So I want to get into the TA again for a little bit. Again, like as I said, even with this pump right now, I'm excited. I love seeing the price go up. You always have to remain at least somewhat optimistically cautious. We don't want people, selling the house, selling the kids, going all in on Bitcoin, even though that's kind of what I did. I didn't sell the kids though. I don't actually have kids. But yeah, I mean, my house was in foreclosure. You guys know that whole story. Not recommended, not financial advice. Don't do what I did. I'm a very long-term believer in Bitcoin. But if we have a look at these cycles right here, this is kind of what I wanted to explain and why we could be entering a different paradigm. Now, this is from CryptoCon, broken down a lot nicer and cleaner than any charts really I show on the channel. And it's very obvious that Bitcoin has been following these sort of 4-year cycles. You could see you have these massive pumps, then you sort of have these, maybe accumulation areas, the continuation, whatever, then you get the distribution into the bear markets, and it pretty much continues over and over again. In fact, here's even like a more simpler phase where you could see they have these waves, and you could see how this is the way that the cycles have been moving. So theoretically, if you're having a look at the way that the past Bitcoin cycles have been moving, then that suggests to us that we're not going to see a new all-time high until after the halving, and that we're going to see the all-time high sometime, roughly, if you want to kind of use this chart, sometime around late November of 2025. But here's where it gets crazy. And this is data that we've been analyzing for quite a long time. Now, CryptoCon actually posted this over on Twitter, and this has to do with the total supply last active for 2 to 3 years. And this is something you can see on chain. Listen to what he had to say. So he says, while I don't subscribe to the idea that this time is different, there's something that we cannot ignore. Early in every cycle, the amount of active coins that have been held for 2 to 3 years rises exponentially. You can see that it repeats over and over again right here. Usually, a little over halfway through the cycle, this group declines rapidly. What we see after is a time frame for the cycle top, which has been between 1 year and 1 year and 6 months, right? That event has clearly occurred. So what he's trying to say is that we usually don't see this event occurring this early in the cycle, but it is occurring in the cycle. So does this suggest that we could see a cycle top this year? Now, obviously, cycle timing and past history would disagree with that. But now, this is begging an even bigger question. Now, there's 2 ways you could look at this. Are we going into I don't hate using this term, I feel like it's played out, but a Bitcoin super cycle where you just see, again, all the models are shattered and Bitcoin just continues indefinitely to the upside? Or on the flip side, are we going to see the reverse where you're not going to get that chance to really get that cycle top in 2025? What if we actually have one of the shortest cycles we ever seen because we have a massive blow off top due to the insane demand coming in from these guys? And maybe, this sounds crazy to say out loud, but what if we get to 100 to 270,000 this year? That goes against a lot of the probabilities. It goes against all of the statistics. But with what we've seen and the demand and the 1 to 3% allocation from just Fidelity alone, which according to British HODL could push Bitcoin up $250,000 with just this one particular product, you have to ask yourself, if it does go up that fast, could we end up seeing that blow off top this year? What that would suggest is that time is in fact running out. And if you are still waiting for these dips, maybe we're not going to get them. Maybe we're not going to get the 30, 35. Maybe we don't even retest the 38. Now, again, I remain, like I said, optimistically cautious, but I'm not going to be ignorant enough to be so, thick-headed to only go off of the data when we have this new beast, we have this new animal, we have the ETFs, and we haven't even barely even seen the inflows come in yet. Even though we have actually seen quite a decent amount, but it's been doing a balancing act between the GBTC sell-off and the others having the inflows, right? So again, like I said, is this a sell the news event? I said it wasn't, and then we hit 49, 0.168, whatever Fibonacci, pulled back, and then all of a sudden it was a sell the news event. But again, that's short-term speculation. Long term, what the ETFs did was they weren't creating a sell the news event. They were creating an open the door event. Hey guys, we're open 24/7. Here we are. Come on in, right? The doors are open. This is something we've never seen before. So I just wanted to kind of let you guys know that as much as I do enjoy looking at the traditional models, we can't ignore some of these inflows that we're seeing. And one other thing too, and I feel like this goes against a lot of what I might talk about, but again, you have to be open-minded. A lot of these people, they don't look at TA, they don't look at charts. You know what they look at? They look at the fact that, these guys are calling them up saying, yeah, Bitcoin is up 150% this year, and there's a chance it might go up another 150%. That Veblen good type effect. Like, wow, really? Okay, cool, Bob. You know what? Give me a 5% allocation, or if you're, using Fidelity, I'll go into the risky 3% allocation, and I'm just going to set it and forget it, and I'm going to leave it there, for 3 years or whatever it is. And they're not looking at the charts. They're not looking at the short-term price action. They are just going to set it, forget it, and ultimately hope that their wealth increases, in a year, in 5 years' time, right? So That is like the big thing that we have to look at. So if we did have to kind of hop in and have a look at what is going on the TA, what you could see is the daily actually came down here and got a little bit like short rejection here on the 89, but we are back above the daily on this EMA. So, once you tend to break above that, it does tend to shift that momentum potentially, back into the bullish territory. Now, again, this does not mean that Bitcoin is going to $60,000 tomorrow, but it does mean that it could be that opportunity for the bulls to take over, at least in the short term, especially having this nice, we didn't even actually retest the EMA on the weekly. If we come over here and have a look on the monthly, well, I mean, the monthly is incredibly bullish. Let's just be honest. If you're looking at Bitcoin in a monthly time frame, incredibly bullish. I mean, we even got this green dot down here. Now, what you would be looking for is, you could see right here, and I'm not saying that this is a trigger wave by any means. That's not what I'm saying to the downside. But you can see that if we do start to roll over here, that may mean that Bitcoin, could go up to that 46K, maybe even 47K level, have a little bit of a retest. But if we get a trigger wave down here, especially on the monthly, then I would say that it is definitely off to the races. And the possibility of Bitcoin putting in some form of, these crazy numbers like 200K by the end of this year could be possible. I mean, guys, it's only January, right? We did also get that test down to at least one of those levels. See, when we were breaking out of this blue zone, what I was worried about was we had 7 straight candles to the upside. 7 or 8, 1, 2, 3, 4, 5, 6, 7, 8 candles to the upside. And then we did have that consolidation, and I said we needed a retest. Well, we did get that retest down to the 38.3 area, right? And that was exactly what we had been sort of anticipating. Again, short term right here, if you're just looking on these very lower time frames, you do have some resistance here, because not only do you have, obviously, you can see right here, we have this heart line right here, but then we also have, this area of interest right here, sort of coinciding, right here. So you can kind of see that, even if Bitcoin does continue to sort of bounce around this area right here, there's going to be a lot of overhead resistance right around that sort of $47,000 area. And this weekly candle, it still has until the end of the week to close. So what I'm basically saying is, if we can close above this area, basically above around $44,000, that does not mean that we're going to 60K overnight, but it does mean that the bulls may be attempting to take this back into control, and that, this was the opportunity. It was this area right here when we had that wick down, right? Very, very confusing market, very, very volatile market, but that's just the name of the game. So again, guys, I could show you these charts. We can go over all of this. Realistically right now, the pump is great. It's awesome. We have had 3 consecutive green candles, which is nice. But, again, we have the 0.618 fib at around that 48.6, 48.7 level. That was the major rejection, and we had been building up to that area for literally the entire year of 2023. We got that area perfectly, and that was the area in which price did start to pull back. So now it's you basically play that waiting game. You see if the technicals are going to continue to play out the way that they have been playing out for basically the past 15 years, or we see if this time it's different. And having a look at what CryptoCon pointed out, looking at the fact that Fidelity is already offering that 1 to 3%, and that's only one, which could push the price up 240,000 with just one product alone. The only thing I can say on these videos, guys, is I continue to make these throughout the years. We try to keep a level head, stay as neutral as possible, and for the most part, we tend to be we tend to be on the right side of things. Occasionally, back in my earlier days, I'll be the first to admit, I sometimes got overly bullish, right? But maybe this is the time in which you should be getting overly bullish. Again, don't freak out, don't FOMO, don't do anything that would not allow you to sleep at night. But with everything that I'm seeing and everything that I'm hearing, even if the cycle does play out, let's say we do have a repeat of what happens with the halving, I mean, guys, you're still looking at maybe the next 4 months being that final opportunity before these guys get these things in motion. The financial advisors start advising, they start putting that 1 to 3 allocation, and this is only coming from one of the products. What happens when all 9 of them do it? And then what happens when other ETFs give exposure to those ETFs? This is something that you need to think about. This is a new game that we're playing. This isn't the same game that we've played. It's been fun, guys. We've made a lot of money. There's room to make a lot more money, but the time might be running out. So I hope that this is sort of a well-rounded video, guys. I don't want to get overly bullish in the short term, but I mean, man, the monthly chart is looking phenomenal. and the 4-year cycle is looking phenomenal, and the fundamentals are looking phenomenal. So you have a lot more things betting towards the fact that Bitcoin is bullish than Bitcoin is bearish, right? So again, I still stand in the area that I am neutral right now, starting to lean more towards bullish, but still neutral, not bearish at the moment, but extremely perma-bullish on Bitcoin, not just for this year, but really for kind of the rest of our lives. I know that sounds a little crazy, but yeah, I think we're going to have that $1.3 million, Bitcoin, like Kathy Wood said. So if you do, look at this, and I understand Bitcoin may not be that exciting sometimes. We want to get into all the altcoins, which, by the way, I'm going to start doing more altcoin content. I know that that's really weird. I haven't talked about it, but I actually historically know that this tends to be the area where the altcoins will shine. In fact, not only that, but you're starting to see the VCs get more active again. You're starting to see them allocate to things. You're starting to see them diversify. That is when you know that things are about to get crazy. So that is it for me, guys. Thank you so much for coming back to the channel. Again, I just wanted to give you a friendly reminder. If you guys are trading over on Apex Decentralized Exchange, they are doing up to 15,000 ES Apex in rewards. It does depend on how much you deposit, of course, but totally decentralized. The fees are like 60 cents per trade. You guys do what you want. I highly recommend, if you're not trading, get your coins off exchanges, get your coins into wallets. But if you don't trust centralized exchanges, a decentralized exchange like Apex oftentimes is, if you're comfortable, it's a very, very highly liquid place to trade if you're looking to trade. So that's it for me, guys. Obviously, all those links are below in the description. Lots of opportunities if you're interested. Let me know what you guys think in the comments. I mean, let me know what you think about the 4-year cycle. Do you think it is different this time? Do you think it's just a bunch of baloney and it's just going to keep playing out the way it is? Starting to have my reservations on it, guys, but we will continue to update you with everything that we see. I love you. You're awesome. Until next time, stay crypto, and of course, peace out.